What's going on, guys? Welcome back to another video. In this video, I've got another AMC update to bring all of you this afternoon. So we have a lot of really cool things to cover in this update video. We're only going to be taking a brief look at the Ortex short interest and utilization data because we're really waiting on that next round of exchange reported short interest to see if that really changes anything so we can get a better understanding of what exactly Ortex's estimates actually are at the current time. We've seen in the past Ortex overestimate their short interest, and now it is very possible that they are underestimating the short interest on AMC, but we're going to have to wait and see what happens when those new numbers get released to us. Now, I think over this last weekend, with all of the drama that happened and with everything that has kind of gone on, I think once the market opened this morning, everybody kind of laser focused right back in on AMC and GameStop and the things that really matter in this situation. And although I think it is really, really powerful for us to really focus on the key specifics of what is going on in terms of the price movement, the different due diligence pieces about AMC and GameStop, I think when you take a little bit of a step back and look at it from more of a macroscopic view, you'll see the trend that we are on, and it is incredibly bullish. Now, this trend right now has to do with the amount of institutional money and overall money that has flown into AMC over the last 4 quarters or over the last year. It is about $2.36 billion, with the amount of money that has flown out, essentially being sold out of AMC, is significantly lower. Now, when you look at that, it brings us to the concept of who is smart money and who is dumb money. Now, retail investors, for basically all of the time that the market has ever existed, have been considered dumb money. But with the current marketplace right now and where I see it heading in the future and the different investment metrics that people are using in order to determine whether any given security is a good investment or not are changing. There are some institutions right now that are changing along with those times, but there are others, and honestly, they're mainly the shorts on AMC that are very outspoken. They're not changing with the times and they can't see what is coming. And we're going to go over a couple of key examples of this in this video. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So what we're looking at today, AMC up 2.67% at the current time that I'm recording, up about $1. Right now it's up $1.07. And even though we saw this pretty solid bounce in the morning, we did see a significant sell-off. Now, this is not over shorting. This is not manipulation. When we look at what was happening in the broad market, the overall S&P 500, the broad market, started to sell off due to a bond move and a move in the oil market. So when we think about what exactly happens with AMC, yeah, this is a very aggressive move to the downside, but it was completely unrelated to AMC, the company, and AMC in terms of its short squeeze thesis, or what is exactly going on with the manipulation, potential manipulation going on with AMC. So when we're coming over to this Ortex data here, we're seeing the utilization at 77.18 and the estimated short interest at 15.21%. But when we look at the exchange reported short interest numbers since the end of September, we've seen it slowly starting to step up. So again, we're going to have to wait and see. I believe it comes out on Wednesday, and that is going to be the day that we will get those newly updated numbers from the exchange. But again, even those are not entirely accurate. So when we move on to this page right here, the number of institutional buyers in the last 12 months for AMC, 235. I wouldn't pay too much attention to this current institutional ownership percentage right here because these numbers are going to change drastically every single day in terms of who is buying what, who is repositioning themselves. So you can't really pay that much attention. I know a lot of people, when they see that number, are going to say, well, retail investors own 80%. Now it's saying institutional investors own 25%. Those numbers don't add up. It must be naked shorting. Now, that doesn't necessarily mean there's naked shorting, even though, in my opinion, there is most likely naked shorts outstanding or a lot of synthetic short positions that have been created on AMC. But this market beat data is not going to be the overall bombshell that is going to tell us that. But when we're looking at these institutional outflows and inflows, $2.36 billion of AMC has been bought over the last 12 months, and only $456 million has been sold. But when we look at this chart down here, you can see that in Q1, only $13 million was sold. In Q4, only $230,000 was sold. And in Q3, one of the most bullish quarters in terms of institutional purchases and sales, only $33 million was sold. But when we look at Q2, $409 million was sold. Now, that was also the quarter where we saw AMC have a very significant, drastic increase in price. So it would make sense that we would see a little bit of a step up in institutional outflows, but the inflows greatly outweighed the outflows even in that quarter. Now, when we're thinking about these institutional purchases and sales, if institutions are buying AMC, a lot of people are going to bring up that concept of, well, they could just be selling into the MOAS to stop the squeeze. I don't see really any validity in that right now, because if those institutions have a winning ticket, a winning card, a position that could go way higher, it would not make any sense for them to sell and basically forego those potential gains that the stock could continue to have. And again, we've talked about this a lot, that these institutions were buying all the way up to 77 and all the way back down to where we are now. So they obviously see there was a lot more upside potential on AMC past $77 a share. Now, moving on from this page right here, let's take a look at the option chain for this week. Again, this is an expiration date coming right after a monthly options expiration period. So it is not likely that we're going to see any significant pileups or any significant potential for a gamma squeeze this week. But again, we're still seeing the crazy high amount of open interest on the call side in terms of the in-the-money calls and out-of-the-money calls coming up in January. Now, if you watch my video from this weekend, we did talk about a really specific reason as to why there are so many in-the-money calls on AMC right now being held, and it has to do with them hiding short interest. So if you guys are interested in that, make sure you guys go watch that previous video. But then taking a look at max pain for this week, it is still at 40, but we are going to see that slowly start to step up going into the December monthly options expiration date. It is right now sitting at 42. And the reason for that is because a lot of these contracts are going to be concentrated a lot further out of the money, meaning that if the concentration in that little window, in that range of where these contracts are really piling up is further out of the money, then these institutions, these market makers, no longer have to push the share price down as far as they were, and we could potentially see that max pain price slowly step up beyond 42 by the time we get to that December expiration date, which could give us a little bit of a ramp to start stair-stepping up, leading into that potential for a run-up in June. Now, I also want to go over some of these comments made by Bronte Capital, an investment management firm. Honestly, some of these statements that they make are just plain flat out wrong. AMC is simply an extreme example of what is probably a non-promoted delusion. It is a highly levered company. That is true. They do have a lot of debt, owning multiplex cinemas. Full disclosure, we are short a tiny position, about 0.1% of our fund. Every year, large screen televisions and home theater equipment become cheaper. Cool. Fair. You can make that statement all you want, but this next one, every year the attraction of the couch at home versus the multiplex improves. It looked like pre-pandemic to be a slow burn to bankruptcy. This is not a guarantee though. Hollywood might come up with a better offer, or AMC might be saved by some new technology, such as a truly realistic 3D that does not give you a headache. Now, they also say that post-pandemic, AMC looks like a fast track to bankruptcy, even after it has raised over $1 billion, mostly from retail investors. So what they're saying here is that people no longer want to go to the theaters, but they're really talking about their own specific fundamental analysis of the company. And if they were paying attention at all, they would see that Disney streaming sees slower growth as consumers venture out of the house. We've seen it in Cinemark's earnings, IMAX earnings, even AMC's earnings, that they are all forecasting growth in the movie theater industry. So either these institutions are so out of touch with how the market is functioning right now in terms of just basic fundamental analysis that they can't see that the fundamentals of a lot of these companies are getting better, or they're short and they want to see this company fail. But again, that brings us back to the conversation about who is smart and who is dumb money. One of the most successful investors of all time, Warren Buffett, has the most amount of cash that he has ever had. Berkshire's cash pile hit new highs at $149.2 billion. Why is this important? Well, Warren Buffett is one of the most successful fundamental investors of all time. He looks for undervalued companies to buy them on the hopes that they are going to gain in value in the future just based off of the fundamentals of their business. But the market doesn't function like this anymore. Basically trying to make an investment into a company just based off of fundamentals and not really taking into account any of these other factors, such as what industry they're in, what kind of retail sentiment there is, how many people are actually interested in this company. It's like trying to trade just using one indicator like the RSI. There are so many other indicators that could give you a better picture. It would be stupid to just use one indicator, and that is what a lot of these institutions do. Can you just base your investment decision off fundamental analysis and do well? It depends on what industry you're in, but with AMC, it doesn't necessarily make any sense to be doing that, especially with the retail investor base that we have and how excited a lot of these people are for the potential for this MOAS, that it has a lot of potential to be in the near future. So these short institutions, these large institutions that think they're smarter than everybody else, they can come out and say whatever they want. But when you really look at what they're saying, they're using outdated investment metrics to try to base their investment decisions off of. Yeah, they might have a really successful fund, but this bet is going to go against them, and it has gone against them over this past year. When we take a look at where AMC has come from, and this is really what I talk about in terms of zooming out a little bit, back in January, AMC was trading at sub $2. We're currently trading at $42.03, and we've reached highs in the $70 range. These shorts are not right on this trade. They're flat out not. You can have people like Gasparino and all of these other large institutions that are most likely very short on AMC coming out with research reports, hit pieces, FUD pieces on all of the paid off news media outlets. They can say anything that they want, but the fact is not going to change that AMC is getting better fundamentally as a company. The shorts have not covered in any significant way, and we are in the same position that we were back in January, June. We're in the same spot. We are in the driver's seat. We have the winning card. In AMC, the apes are not leaving. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.